This is Kunal Shah from ICICI Securities. Today we have with us Mr. George Alexander Muthoot, Managing Director, and Mr. Oommen K. Mammen, Chief Financial Officer from Muthoot Finance, to discuss their FY21 earnings as well as medium-term strategy and outlook. So congratulations for robust growth and ROE even in this challenging year. And on behalf of entire investor and analyst community, I would want to convey our deepest condolences and heartfelt gratitude on said demise of Chairman, sir. So over to you, sir.
Thank you. This is George Alexander Muthoot, Managing Director of Muthoot Finance. I have with me our Chief General Manager, Mr. K.R. Bijimon, Executive Directors, Mr. Eben Alexander, and Mr. George M. Jacob, and also the CFO, Mr. Oommen K. Mammen. I'm sure the other directors are also on the call listening from elsewhere. We are speaking from the head office at Cochin. You may be aware that we would like to place on record our definite heartfelt condolences and on the passing away of our chairman, my elder brother, Mr. M.G. George Muthoot, on 5th March 2021, last 5th of March this year. So at this meeting, we have appointed Mr. George Jacob Muthoot, one of the promoters of the company, who was unanimously appointed as the chairman of the board of directors, a position left behind by Mr. late M.G. George Muthoot due to his untimely demise on 5th March. He is the younger brother of M.G. George Muthoot, of course, my elder brother too. He is taking over the mantle. Mr. George Jacob Muthoot said he is truly honored and humbled to accept the chairmanship of the company and privileged to take this wonderful company and the team Muthoot Finance forward the next decade and beyond. Remembering the past chairman, Mr. George Jacob Muthoot, and we all feel that he, along with the other members of the family, are truly committed in upholding the values and benchmarks set by our elder brother in the business profession, and in life. We are all sincerely and fervently focused on achieving the vision and mission set by late Mr. M.G. George Muthoot, whose guiding principles, ethos and values continue to guide us today and in the years to come. So with that as our condolence on Mr. M.G. George Muthoot, our former chairman, I would like to formally present to you the financial results for the financial year 2020-21. Key milestones is something which I would like to present here. Our long-term rating has been upgraded to AA+ by CRISIL and ICRA. Our loan portfolio crossed 52,000 crore mark in this year. Our total revenue for the year also crossed 10,000 crores. These are good and clear milestones. Profit before tax also crossed 5,000 crores and net worth crossed 15,000 crores. The total loan disbursements in the year is 1.24 lakh crores, or 1,24,000 crores is the total loan disbursement in this year. At this point, I would like to slowly think back about the shareholder value which our company has been able to create. Our initial public offering was in April 2011 and our listing happened in May 2011. The issue price at that time was 175 rupees and today it is around 1,400 rupees, a good 600 plus share price increase. The market capitalization at the time of issue was 6,504 and today it is around 50,000 plus. The BSE Sensex, which is 644% growth, whereas the BSE Sensex from 18,000 has gone to 49 and 50,000 and it has grown by 167%. The gross loan assets at that time in 2011 was 15,800 crores, which is today 52,600 crores. a cumulative growth of 36,000 crores, or in percentage terms 232 crores. The revenue also has more than doubled from 4,500 to 10,500 crores, and the profit after tax from 892 crores to 3,722 crores. Again, a growth of 317 crores. Our net worth, as I said earlier, has increased from 2,900 crores to 15,000 crores, a 421% increase. Dividend per share, which was 4% at that time, has now come to 20%, 20 rupees per share, which is a 400% growth. And the total dividend payout at that time was 149 crores, which is today 802 crores, which we paid a month back. The total dividend we have paid to the shareholders in the last 11 years is 3,544 crores. This, I personally feel, has been a reward, rewarding to the investors who have been with us even from the initial public offering at 175 rupees. The key financial highlights, as I said, the consolidated AUM has increased by 24% year on year at 58,280 crores. The consolidated profit after tax is now at 3,819 crores, which is a 21% year-on-year growth. And the standalone AUM has grown by 26% year-on-year at 52,600 crores. Standalone profit after tax increased by 23% to 3,722. CRISIL and ICRA upgraded us from AA to AA plus stable, and dividend of 200% on face value of 10, involving a payout of 880 crores. The branch network, which was 5,330, has grown to 5,451. The group branch network, and the contribution from the gold loan business in the consolidated gross AUM has grown 27% to 52,000 crores. The other home finance, the subsidiary, has degrown its book, but it is now on a growth path now. And for this year, we plan to do good disbursals in this year. Last year, our disbursals were very, very low, and we were doing a consolidation and collection at that time. Belstar Microfinance, the microfinance, has grown its book to 3,300 crores as against 2,600, which is a year-on-year increase of 25%. And this year, the loan portfolio, this quarter, has increased by 414 crores. The profit after tax has certainly come down to 47 crores from 99 crores, mainly against the provisions which had to be made, mainly due to the COVID impact. The Muthoot Insurance Brokers, again a 100% subsidiary, has generated good profit, and it has generated a profit after tax of 32 crores against 11 crores in the previous year. The Sri Lankan subsidiary, which is gradually becoming like Muthoot Finance, a gold loan company. Initially, when we entered the company, it had nil gold loan. In the last 8 years, they have grown their gold loan book, and today they are almost 50% of their book is gold loan. And we hope that, we expect that it should also become, just like Muthoot Finance, a 90% plus gold loan company. This year, against the previous year tax, profit after tax of 7 crores, this year it has reached only 5 crores. Again, the COVID impact, etc., had its impact in Sri Lanka also. The Muthoot Money, which is a vehicle finance arm of Muthoot Finance, has also not grown its book last year. It has actually degrown its book because its book has been running down. They are restarting the business from next month onwards. We are sure it will also go up. And it has generated a revenue of 70 crores and a profit after tax of 4 crores as against 3 crores in the previous year. These are very new companies, only 2 years and 3 years old. We hope that these will come, this will turn around and come out of this issues next year. And today, our gold loan book, which was 88% last year, today constitute 90% of our book, and the subsidiaries constitute 10% versus 12% last year. This year, the focus has been on growing the gold loan book at the cost of even degrowing the other book. So, concluding the initial remarks, I would now throw open the floor to the investors who have been really supporting us all these years, all these times, and we have definitely, certainly value your support, and we request you to continue to support us in days to come also. And now the floor is open for questions. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Participants, to ask a question, you may press star and 1 now. The first question is from the line of Piran Engineer from Motilal Oswal. Please go ahead.
Yeah, hi, thanks, and congratulations on a great set of numbers. I have 2-3 questions. Firstly, as of end December, our LTV was 67-68%, and we had a 10-12% decline in gold prices in the fourth quarter. So, is it fair to say that by end March, our portfolio LTV would have increased to 75% and maybe breached that? And in such cases, what do we do? Do we ask the client to top up the portfolio or to top up the collateral? And if he doesn't, then do we, start repossessing and auctioning? So that's my first question. I'll get to the other ones after this.
You can continue question.
Okay, sure. So my second question, basically on slide 32, where you talk about your customer base. Now, if I add up the disbursements made to, all the different categories of customers, it adds up to 10 or 11,000 crores. But your total disbursement this quarter was 23,000 crores. So the balance 12,000 crores is a rollover. Is that how we read it? And my third question is, despite having a AA plus rating, our cost of funds is pretty high at, north of 8%. And we're also maintaining a low share of CPs. So when do we really see our cost of funds coming down to the levels of other AAA rated players, other NBFCs? So that's all from my end. Thanks.
Okay, thank you. And the LTV, if you look at the LTV from the today's price, the LTV is 66%. So this keeps fluctuating in months. Some months it goes up, it goes down. So we don't get we don't panic when the LTV goes up or goes down, because these are all gold ornaments. These are all gold ornaments. We have sufficient margin, headroom with elbow room with us, and we have not seen people abandoning the gold. We have been in this business and the listed company for the last 10 years, and listed after 10 years. So we have not had any reason to panic. There's nothing to panic there. So we always give only maximum of 75% of the current LTV. That itself is good enough for us, and we have not had any issues because of that. So LTV, it becomes 70%, 60%, 67% because every day price changes. So nobody needs to panic, and we don't call up customers and ask them to bring gold, etc. because we have sufficient margins with us. And there are some invisible margins also, like we give only ornaments, we don't do gold bullion, etc. And we regularly contact customers to pay the interest also. So those are the good mitigations we have, among other things. So because of that, we have never had any problem with the issues. But
even if it crosses 75%, we don't, in the interim, we don't call the customer.
We don't look at it also because we don't need to look at that. We don't, because today it will cross 75%. If hypothetically, and tomorrow it comes to 73%, then what happens? So we don't do anything like that. That's not the business model. The second part that I like to look at this slide 32, etc. AA plus rating, yes, incrementally our borrowing costs should come down because with this legacy loans are there. That is why our loan is high. As and when the legacy loans get off our books, get little down from our books, the interest rates should come down. It's not that people are still charging us high, the lenders are charging us more money. It is that it takes a little time for them to adopt to the company to come to the whole book to come to a lower rate. So I'm sure compared to our peers, our incremental borrowing costs are equal or if not lesser than others. And about the slide 32, I think.
So, Piran, there are 2 points in this. The number of customers which we have shown is the outstanding as on 31st March. There are several loans which have been disbursed during the quarter. As you know, gold loans are very short term. Customers would have closed before 31st March. So
within the quarter.
Within the quarter, intra quarter, a lot of customers would have closed. So that is one point. So that is also a sizable number. The remaining, as you said, there could be rollovers. Rollovers could be happen because of switching of schemes by the customers. Suppose if we have a lower rate scheme in a particular location, so the customers move from the higher rate schemes to the lower rate scheme. So that also contributes to the balanced disbursements.
Got it. If I may just squeeze in one more question. Now that the banks no longer have the 70%, 90% LTV, arbitrage, how is competition shaping up in, April and May?
No, April and May is washout because many of the branches are not able to open properly, etc. I'm sure by 15th of June things will start improving and people will start coming out and businesses will start reviving. Only when business starts picking up, the demand for loans will start. The demand for loans will start when business start picking up and people need to restart their business or start new businesses. So, because the banks were giving 80%, 90%, I don't know how many banks would have given at that rate. It has never really impacted our business. As you would have seen, we have grown much better than previous years in spite of this. But surely, if the banks have also gained some business, it is because the market has grown. The market has expanded. That's what I should say. When banks are also doing it, market has expanded. We have not lost any business. Neither have they lost any business. We have grown. The banks would have also grown. I'm not sure about their numbers. So we, from our side, we don't see any threat of competition, etc.
Okay, got it. Thank you for answering my questions and wish you all the best.
Thank you.
Thank you. The next question is from the line of Digant Haria from GreenEdge Wealth. Please go ahead.
Yes, sir. So congratulations on great performance despite whatever challenges we keep on facing from the economy and otherwise. So my question was mainly on the two new, one new product and service that we've launched. Like, if I look at financial year 21, we started home delivery of gold loans in a few cities. So if you can just talk a little more about it, that, how has been the initial experience and eventually what is a larger plan, say, over the next 2-3 years on this product. So that's my first question. And second question is that, I saw some ads where, we are giving large loans at a very, very competitive rate, maybe 10-11%. So, is this product more aimed at competing to the customers who will look for banks as an alternative? And what is our strategy on these low-rate loans? So that's two questions from my side.
First of all, Loan at Home. Loan at Home is a service which we are offering to our customers. It's a paid service. So Loan at Home entails a cost for us and a cost for the customer also. So any customer who wants to avail this loan facility, he phones us, he keeps an appointment. Our branch staff go to their place, take the gold loan, check it, weigh it, assess it, and then bring the gold to our place, and at the same time, simultaneously release the gold to the customer. There are some customers, especially some large value customers, who opt for this. But generally, what we have seen is 95% of the customers are more comfortable bringing their gold to the nearest branch, sitting with the branch and giving it to them. It is only few people who sometimes want the service. If anybody wants the service, we are there to give it to them, and it is definitely a small charge is there for that, because generally people with 2 lakhs, 3 lakhs is where it makes sense for them also to take this gold loan at this rate. So Loan at Home is a service which you offer. It is good. Our own people go there and take the loan and give it back. And if they want the delivery at their home also, same thing we can do there also. So that is the two things which we do for the Loan at Home. Regarding large loans, yes, occasionally we also have to come up with some low interest schemes to attract customers. We cannot advertise in the paper saying that we are charging 18%, 17%, etc. So when we advertise, we have to advertise for a lower rate. It is just a rate which you offer to big customers. Not that we have 1 crore and 2 crore large number of customers. There are very, very few customers. But then it gives a sense of what should we say? We are also there with anybody else who is competing at low rates. We are also able to compete at low rates. So our average yield doesn't come down because of that. A few customers might take it, but then certainly we need to offer, attract bigger customers as well as the smaller customers. The smaller customers are our mainstay.
Right, sir. So thank you for the answer. Sir, if I can squeeze in one more question. Sir, we've crossed the 50,000 crore milestone on the gold loan book. So maybe next 4-5 years somewhere, maybe we'll cross 1 lakh crores also. So in that journey, what are the few risks and opportunities that, you as a company, you as a promoter, think for Muthoot Finance are? Your thoughts on this. Thank you so much.
Because 50,000 we crossed in December. In March we reached 52,000 crores. So that is, but then I am also, our chairman always used to say we should aim for the 1 lakh crore market. I think you must have heard our chairman. That is why you are also repeating this 1 lakh.
Right, sir. Right, sir.
He tells us, not to you, he tells us that we should, definitely we can reach it. We should be able to reach it. I'm sure going forward we all would like to reach that. The challenges there wouldn't be much. We are this is operationally challenging is one thing, and we are every day trying to fine tune our operations to adjust to these things also. So because today the average branch business is 12 crores, around 11 to 12 crores. So if we reach 1 lakh crore means we should have a 25 crore in the branch. There are branches with 25 crores. So we can technically, theoretically reach there. but then we hope to do that. The challenge is there. I don't think as long as woman is there, we don't feel any problem in the funding side. So that is not there. On the jovial side, I said we will not have funding issues. But then operationally, it is very challenging. That's what I wanted to say here. But operationally challenging is something which we are every day trying to fine-tune. Everything will increase. Every issue will increase, and we should be able to fine-tune that going forward. As a calibrated growth every year, we should be able to reach there also.
Right, sir. Right, sir. So I genuinely hope, late Chairman sir's vision and, you and the team's execution will be there sooner than later. So thank you and all the best to the team.
Thank you. The next question is from the line of Anand Bhavnani from White Oak Capital. Please go ahead.
For the opportunity, first of all, congratulations for the wonderful performance throughout the year. Sir, my question was about our credit rating. You must be having these discussions with rating agencies to, talk about our robust performance during pandemic, once in a century pandemic. Even in the gold price fall of 13, we had robust performance. So, and our gearing is very low. So, is there a scope for rating upgrade? I mean, what is that you would need to do to get to a AAA rating?
Thank you. We always would like to get a higher rating. That is always in our mind. As they say, it goes only by steps and steps. The next step, I think, after FA Plus should be AAA. So we are there. Probably we will be constantly engaging with the rating agencies, so that and we will not rush till we get the AAA. From our side, we all definitely always feel that we are much better placed than many others who presently enjoy AAA. We are much better placed, but it's only a little bit of convincing we need to give, and the conviction which the rating agency also has to have. Probably every year of performance, every year of stable and good performance will help them to decide on giving us a AAA rating. And I'm sure if we perform like this, it should not be sooner than later that we also get a AAA rating. There are no issues with them, but it is only that they also think that rating should be calibrated, should be given in steps and stages. So we have crossed the FA Plus stage, so we probably we'll have to wait a little while for that. The little while can be 6 months, 1 year, 2 years. We also would like to come into the AAA league, just like you. We would also like to come into the AAA league.
Sure. So it's on consideration. We keep talking, and maybe if things work out in a year and a half, we should be there. Is that the right expectation?
Yes, sir. Every discussion we have with them, we remind them that we need to get the AAA. I personally remind them every time, every discussion we have. We have sometimes discussion every quarter, once in a quarter, once in a half year. We have a discussion with them. I always remind them that we should be given AAA.
Got it. The second question about this disbursement, intra-quarter disbursement. Typically, what is the ratio? I mean, if we disburse, let's say 100 in a quarter, what percentage of it would be squared off intra-quarter? It's as high as 50%, or I mean, is it 25%? What's the typical number?
See, usually people who take a loan, I think the 10% of them close the loan in the same month itself. I think there is a number like that.
I think in the presentation there is a slide on that. So, I think it is page 29. It is there. The details are there. How the loans are retired in the first 6 months. So generally, if you look at for last 5 years, about 60% of the loans gets retired in the first 6 months.
The first 3 months also a good number.
Generally the thumb rule is in the first month itself about 10% gets liquidated, and the second month about 20%. So like that, first 6 months, the normal pattern is about 60%.
Got
The contractual tenor is 12 months.
Of what we disburse, not the outstanding, sir. Of what we disburse.
Yeah.
Yes, sir, I got it. And sir, thirdly, we started diversifying into microfinance, CV, and home finance. And due to various reasons, there was GST, then there was the elections, and so on and so forth, and then there was weak economy, and now COVID. So all these products, we probably haven't scaled up to the extent that we envisaged when we started them. Now, given our experience in these products of last 3-4 years, and what is your take? Like, if assuming things get normal and from here on there are no such hindrances, which of these products would you like to, grow aggressively over next 3-4 years?
So, as far as microfinance is concerned, it is not related to Muthoot, the gold loan customers. So it is a separate vertical, and maybe we have a 70% investment there. That is a different class of customers. So that has its own growth business. The other 100% subsidiaries which we have, the vehicle finance and the home finance, these two are definitely the customers are potential customers of gold loan, are potential customers of these vehicle finance, that is the two-wheeler, used car, and the affordable homes. These are typically our own customers. So we want to leverage on this. We want to see that the customer remains with Muthoot. That is the reason we started this. We are still, it is just that in the last 2 years there have been some issues with the pandemic, and also I don't know about GST, but general economy, etc. These businesses are bound to come up better. The affordable housing is something which India definitely needs, and it is only that there were some issues with builders and also the pandemic which has actually affected the home finance. I'm sure both of that are getting sorted out. Once this is sorted out, there is very, very good potential for this, and we will be growing much better in those areas, those one also. The same thing with vehicle finance. There is an issue. Vehicles are not selling. Pandemic is there. People are not going out. Factory productions are. But it is bound to change. It cannot remain forever. Probably it will take 3 months, 6 months, 9 months. Then we are ready for that. So these are two businesses which we would like to grow. We see potential, and there is relationship for these business with our own gold loan customers. That is why we started that. It is a related business. That is why we started that. And after maybe this year and next year, we should see it reviving and coming back to normal.
Thank you. The next question is from the line of Shubhrat Devidi from SBI Life Insurance. Please go ahead.
Hi, sir, and congratulations for good set of numbers. I have a couple of questions. First one is on slide 31, where you have shown the margin of safety on loans, and that has been reducing consistently. Now it is at 25%. And this does not include the accrued interest on the gold loan assets. So, at what stage this becomes a concern and you start auctioning aggressively? And a related question to this is, incrementally at what LTVs would the disbursement be made?
Okay, thank you. So I think the second question is can be answered first. The incrementally or new loans are given at 75%, maximum 75% LTV. Not that everybody takes 75%. Some customers take only 60%, 65%. But the maximum we give is 75% of that day's gold price. So that is fixed. We will not do more than 75% of that day's price. So the margin which we are required to keep or which we feel safe is 25%. That is always there. So sometimes if the gold price goes up, then the general LTV, as you said, would be only 50%. Then it goes to 60%, 65%. Today, at today's price, the overall portfolio, the LTV is only 66%. If the price goes up, it will come down again. If the price comes down, it will go up. But then we don't panic there because these are all gold ornaments only. These are our risk mitigants. These are household gold ornaments, which is used by the people. It is not that just because the price has fallen for a day, everybody will abandon their gold. That is not what we have seen in the last several decades. And in the last 10 years, our figures are all reported public because we became public. So we have not had any issue because of that all through, and we don't expect anything like that now. So now the final thing is auctioning the gold. We can always give more time to the customer, and today we, as a policy, we are not in favor of auctioning gold. We try to keep the auctioning to the least possible, the barest minimum which is required. So whenever customers come and ask for more time to the branch, we try to adjust the customer and give more time to the customer. We have not lost any money because of that, but in fact we have gained customer confidence, and customers generally feel that we are more reasonable with them. And probably that is one of the reasons we are not aggressively auctioning the gold. One of the reasons customers prefer to come to us. Many of our competitors have almost a similar number of branches, but they have only a third of our business. That is because people generally feel that Muthoot, their gold is safe. That is what people generally want. My ornaments should be safe, and that is safe with Muthoot. So even when we carry some NPA with us, probably today the NPA is low, 0.8% only is NPA, we can actually have that NPA at zero and auction the gold. But we don't want to do that. We don't want to. We want to empathize with the customer and give a little more time. We can afford to have that NPA in our books, 0.8% NPA we'll have in our books. We are sure that the customer will come and take it. If finally the customer doesn't come and take it, that is when we go for auction. This year our auctions have just very, very little. We auctioned only 170 crores of gold on a book of 52,000 crores. Only 170. Last year it was about 500 crores. Previous to that, it was 1,000 crores. Actually, we are now coming to the fact that we are giving more and more time to the customer so that the least amounts are auctioned. So if you look at 171 crores of auctions in the last full year, it is just 0.03% of it. It is just nothing. So we give more. So people generally relate Muthoot Finance as a company which they feel their ornaments are not auctioned very quickly. It is kept and they get maximum time from us. Only very, very sparingly we use the auction method. We have never lost money because of that. We have only gained profit and we have gained customers.
Okay, sir. And one last thing on the collection efficiency. So how is it shaping up now in April, May, etc.?
In gold loan, actually, there is no issue of a collection efficiency because collection efficiency has been very good in March. That is why our NPA is only 0.8%. In the other two, the home finance, etc., the collection efficiency was 99% in March. Now it has come in this month. It is just coming down slightly because of the lockdown. I'm sure it will come back to the 99%. In Muthoot Money, it is 97%, and Muthoot Home Finance it is 99%. That was in March. April it has come down a bit, but I'm sure when the branch starts functioning and people are able to go out, we will be able to collect the full amount. So we don't see any big issue there, and also the portfolio there is very minimal.
Thank you. Ladies and gentlemen, please limit your questions to 2 per participant. Should you have a follow-up question, would request you to rejoin the queue. The next question is from the line of Dhaval Gada from DSP Mutual Fund. Please go ahead.
Yeah, hi sir. 2 questions from my side. First is related to the MFI business. What is the current PAR 0 on the portfolio, And if you could talk a little bit around collections in April and May, how has it trended in the MFI portfolio? And the second question is related to, if you look at holding per gram of a customer, so about 33 grams is what a customer owns on average based on disclosure. And this number has been broadly, steady or coming down in the last 2.5 years. So is it a metric that you look for, and is there a driver to increase, or how should one think about it? Because basically the reason I ask this question is when I look at tonnage growth pre-pandemic as well, it used to be 5 to 6% for the industry. Even now, while we've had a pandemic year, but tonnage growth seems to be a big challenge for the industry. So how should one think about volume growth for the industry? Those were two questions. Thank you.
So, I think we have been talking about this tonnage growth for the last 2-3 quarters. What happens is, when the gold price is high, I cannot insist on a customer to give me more gold or gold at equal to the gold price, which is, today the gold price is 4,500. The tonnage at the time of 2,500, he should have to bring 20 grams. Today, for the same amount, he needs to bring only 10 grams. How can I ask him to give 20 grams? So he will give only the necessary gold. So when the gold price goes up, necessarily the gold which he needs to give to us also comes down. And please understand that just keeping more gold with us doesn't give us any income. Our income is derived only from the loan he takes. For the amount of loan, he gives the adequate gold. So the adequate gold today, because the gold price is high, is lesser than what it was earlier. That is why the tonnage is there. If you look at the same gram rate, probably 2 years back, the price would have been only 2,500 or 3,000 rupees. Today it is 4,500 rupees. So customers will bring in only the required amount of gold. That is where the tonnage difference is there. So we did not see anything into the tonnage business. And the gold loan, our company derives income only from the loans which we give, the amount of loans. It's interested on the loans, not on the tonnage. So that is growing. We are quite happy. We get the correct the LTV based gold is there with us. We should be happy. So that is the again about this PAR of Muthoot Microfinance. I think our Chief General Manager can tell you something.
The PAR 30 days was on March was 2%.
Yes.
So, 30 days PAR was
it's very low.
It's low actually on
compared to industry. We are better than the industry standard. The microfinance. That's what.
Sir, the slide 68 has the stage 3. I was looking for the overall portfolio overdue outstanding right now. And the collection trends.
Overall portfolio outstanding is 3,300 crores.
Overdue, sir. Overdue.
I have to look at that.
I can take it with Oman sir. No problem. Yeah, thank you.
So the stage 3 number is 78 crores.
78 crores.
As of March.
Sir, I'll take it offline. No worries. Thank you and all the best, sir. Thank you.
It is 2%. 2.2%.
Yeah.
The net NPA is only 0.5% because of the provisioning which has been done.
80 crores additional provision has been created in this year.
Okay.
Thank you. The next question is from the line of Prashant Sridhar from SBI Mutual Fund. Please go ahead.
Yeah, thanks. Most of my questions answered. Just 2 or 3 of them. So one, even due to some price change, if the LTV crosses 75, that is in breach of RBI regulation, right? So we would have to do something to control that. If you could just talk about that. And number 2, if you could just give us the restructuring numbers you would have done in the non-gold loan business and how the collections trend over there. And number 3, just a bookkeeping question. There's an item net gain on fair value changes in Muthoot standalone. What would that be?
Okay. Now about this LTV, I think I just answered it earlier also. When we give the loan, it's 75, maximum 75%. if because of the price change, one theoretically, if it goes above 75, we don't need to contact the customer and ask anything. That is not our practice. Our practice doesn't involve contacting the customer at that time because we still have good margins with us. The margin is still there with us, so we have not faced any issue because of that. So we don't ask them for additional collateral, etc. So regulations also doesn't warrant us to do that. That is number one. Okay. Then second is, even at this time, we always collect regularly the interest of the customer. So we have an app which is called Click to Call. Click to Call app is there with all the staff. They can call and talk to the customer just by a click of a button, and that is actually keeping the customers in contact, and our staff also are able to easily contact them even during this pandemic time. Even during this pandemic time, we were able to contact all the customers through this new app developed by us, which we have named it as Click to Call. It is an app which enables the staff to connect to the customer immediately at the click of a button. So to answer your question, 75%, even if at some time it breaches, we don't go after the customer. That is number one. Number two was about
the net gain on fair value changes. I think you are asking about the income side, right?
Yeah.
So that is mostly investment gain, the returns from investments in liquid funds, etc.
Okay, sure. Nothing to do with the hedging. That's what I wanted to check.
So that hedging comes under the other comprehensive income. That is after profit, PAT. So those numbers are primarily because of the exchange fluctuations happening on the reporting date. Now, if you look at last 1 year, what has happened is the exchange rate has gone up, and subsequently it has come down as on the March 21. So those fluctuations are captured, but at the end of the day, all these foreign exchange borrowings have been fully hedged. What is going to hit the P&L is only the hedge cost. All the mark-to-market impact will remain in the OCA.
Understood. Just on the restructuring in the non-gold loan businesses, just one clarification. So
yeah, please go ahead.
Just one clarification, sir. At what LTV would you start to take action if just one follow-up? Yeah.
No, it is not based on the LTV.
It is not an Excel formula which runs this business. I think
it is actually something I was telling the earlier investor also, that we have a good relationship with the customer at the branch. So even if the gold goes into the NPA list or it crosses NPA, we persuade the customer to pay interest. Sometimes the customers come and ask us, please give me 1 month's time more, 2 months' time more. If the branch feels that it is a genuine customer, genuine requirement, we give him more time. And the cost of keeping it as an NPA in our books, hoping that he will come and take it. So even if it fails, after that only we go for auctions. So auctions is our very, very last resort, and we try to keep our auctions to the minimum. See, our auctions were about 1,000 crores 3 years back. Last year it was 500 crores. This year it is only 171 crores. We are trying to keep the auctions to the minimum possible and give more empathy with the customer so that we don't auction his gold. If the auction is gold, we lose the customer and his relative. That is why customers just keep coming to Muthoot, because they say they are most reasonable in this respect.
So the restructured loan account is about 6 crores. That is in non-gold portfolio.
6 crores. 6 crores is the restructured portfolio.
Across everything, HFC, MFI, vehicle finance, all put together?
Yes.
Okay.
So
okay.
Thank you so much. The parent company.
Very limited.
Very, other businesses, subsidiaries, it is very limited.
Very limited. Smaller than.
Okay. Sure. Thank you so much.
Thank you. Ladies and gentlemen, please limit your questions to 2 per participant. Should you have a follow-up question, would request you to rejoin the queue. The next question is from the line of Manan Tijoriwala from ICICI Prudential Asset Management. Please go ahead.
Hi, sir. Good morning. Good evening. Sir, just wanted to understand, on the OpEx to AUM, we see a dip there. So where do you see it on a basis, and what were the incremental efforts taken to bring it down this year?
No, that is because the assets under management have grown 27%, and the number of branches are still almost maybe only 80 or 90 branches have gone up. So the per branch business has gone up from 8 crores or 9 crores to 12 crores. That is one of the main reasons why it is the economies of scale that we are seeing. But that is for this year. Probably in the next 2 quarters it will inch up a little more, but then it may not remain this low because this time it was quite low. Mainly because the assets under management, the denominator went up quickly.
Fair enough. Sir, one question on the gold auction. So I understand you've been keeping it on the lower side. Could you shed some light on what sort of profit or losses do you see on account of auctioning the gold?
There is no profit or loss, sir. If we have an excess, we have to refund to the customer. So there is no profit and loss there. Sometimes we lose some part of our interest, very little part of our interest. That's all. So the loss is always on our side only. If there is a gain, if the auctioning yields more, we have to refund it to the customer. We correctly refund it to the customers.
But on the downside, if you were to look at how much would be the downside in case you lose money on a transaction which is auctioned?
We lose only part. See, instead of collecting 22%, 23%, we may end up with 20% in some cases. That's all. It's paltry amount. And that's also only on the interest, sir. Principally, we have never lost 1 rupee till now.
That's what I was looking for. So just one additional question. So how much will be the accrued interest on the gold loans outstanding at the end of the year?
2,145 crores.
2,145 crores.
Sure, sir. Thank you. That's it from my side.
Thank you. The next question is from the line of Ashwin Balasubramaniam from HSBC Asset Management. Please go ahead.
Hello. Hi. My question is with regard to the chart which you've given on the disbursements and collections quarter-wise. So, I mean, if I look at, let's say, the collection, monthly collection this quarter is at about 7,000 crore versus a couple of quarters back it was about 15,000 crore. So, just trying to understand, I mean, is this a function of the rollover being lesser during the quarter, and I mean, again, is that connected to gold price falling during the quarter, and like how would the rollover proportion have changed let's say over the last 6 months?
We will talk about the slide 28. Slide 28 in Q1, it was mostly it was a lockdown period. So people were not able to come to the office. We were not able to. Both the advances and the releases were low. So what we lost in Q1, we gained in Q2. That is why you see the difference. So in Q3 and Q4, it is becoming back to normal.
Right, but even if I compare this to let's say the previous year also or Q4 or Q3.
Every year,
yeah. So this is second quarter event is specific due to COVID. In the first quarter, there was a severe lockdown and lockdown restrictions. So the disbursements were low, but we could make up in the second quarter. As we said during that time in the analyst meetings, etc., we went aggressive in terms of top-up loans. And a lot of customers benefited out of it. Even at that point of time, the average LTV was quite low. So a lot of customers took the benefit of it in taking top-up loans. So that's why the existing customer loans would have closed and they would have booked fresh. That is the reason why there is a higher churning which has happened in the second quarter.
Right. And one additional question. In terms of, let's say, what will be the average sort of tenor of the loan on the books? I mean, the sort of remaining tenor, the average residual tenor, and how would that have changed, like let's say between 1 quarter, 2 quarters back to Q4, or it is more or less constant?
I think 95% of the loans are less than 12 months.
At the time of disbursement, you're saying, but I'm saying like.
As on the reporting date, 95% of the loans are less than 12 months duration.
Okay.
Only about 5% of the loans are overdue. This includes NPS also.
And how much would be, like, let's say, more than 6 months and less than 6 months?
I don't have the breakup readily available, but most of the loans will be less than 6 months.
Okay. Thank you.
Because if you read it together with the the other chart in terms of slide 29, you can figure out how the repayment pattern happens. More or less, it is that is the pattern we have seen in the past. So most of the loans gets revolved in the first 6 months.
Thank you. The next question is from the line of Amit Ganatra from HDFC Mutual Fund. Please go ahead.
Hello.
Hello, yes, please.
Yeah, I'm referring to slide number 13. Now, the slide on dividend payout. Now, in 2015, your ROEs were lower than FY21. Your capital adequacy today is much higher. Isn't there a case for increasing the dividend payout ratios?
Yeah, I think something we'll have to take a decision. The board has to take a decision what about such thing.
So that was one, because you will not have a year like FY21 hopefully in future, right? So and in this year, if your capital adequacy is improved and the kind of ROEs that you reported, that just indicates the overall strength of the business. So please take this as a feedback.
I think if you see slide 48, we are generating a ROE of 27-28%, which is
exactly
return in spite of the higher capital.
No, correct. So that's what. So that in fact reflects the strength of the business, that your capital adequacy is so high despite that the ROEs are, so strong. So there is a case for increasing the dividend payout. That was the feedback. The second is that last year, now this year, you had given some growth guidance and you have exceeded that guidance quite strongly. Have you any, do you want to give any growth guidance for the upcoming year?
We have been giving a guidance of 15% every year for the last several years. We have next year also we would like to give that guidance as 15% only. Probably we should do better, but anyway we wanted to do only very conservative guidance. We have given the guidance of 15% for last several years. So previous year we grew by 17%. Previous year we grew by 19%, and last year previous to that we grew by 22%, and this year we grew by 26%. So probably on this year also we may do better, but we didn't want to give a what should we say, too optimistic guidance. We wanted to give a conservative guidance. That's why we have been telling that we will be growing 15% year on year minimum.
Okay. Thank you, I'm done. Thank you.
Thank you. The next question is from the line of Alpesh from Motilal Oswal. Please go ahead.
Yeah, hi. Hello. Hi. Congratulations, sir. First question is on your slide number 31, wherein the active customers and the number of loan accounts are given, right? If I see the trend, 60% of your overall customer base is normally active. So any specific steps that you are taking in order to increase this share of active customers was on the pool of your overall customers? Secondly, whether the new overall customer base or the active customer base is only growing by 5%, right? So and then we are talking about 15% AUM growth. That means we are largely banking on the 8-10% kind of increase into the gold prices for that kind of a growth if we are moving with 75% kind of an LTV. So what is the strategy at play here? And the last question would be just a data point. What percentage of the customers have more than 1 lakh rupees as the ticket size in terms of the AUM and the number of customers? Thank you.
So I think you are looking at the number of customers. These are the number of active customers. Our customer base is much more. It is more than 2 crores customer base we have. Some customers pledge their loan, take it back in 1 month, and they may come back after 3 months, 6 months, 8 months, 9 months. So our customer base is 3 to 4 times the active customers. So
I'm sorry to interrupt, sir. So how do I read this? Number of loan accounts are also the active loan accounts, or those are the overall loan accounts?
It is active loan accounts.
Okay.
It is an active loan account. The customer base is much higher. So some customers who have been transacted, we have a few systems of calling up customers. We call it win back customers. So we call them back and tell them about these things, and they come back to us because they have banked with or done business with Muthoot earlier. So the churn is very high. So people keep it after 1 month, 2 months, 3 months, they take it back. Then they go back. They may come back later, probably 2 months, 3 months, 6 months. So our customer base is very high. The active customers, active loan accounts in the books is what you see there.
Active customers. One customer will have a 1.6 X as the loan account. That's the way to read this.
Okay. Exactly.
Okay. And what is the strategy to increase this active customer base? Because its growth is hardly 4-5% on an every year, and we are not growing branches aggressively. So how are we? Because our growth would largely be dependent upon the gold prices. So how are we planning to address this issue?
So we have plans of that. We have very many marketing and sales techniques with us, and we have a good marketing team. We have a good research team also. We utilize all those things to get new customers. Finally, our AUM is also growing, and we have been doing that even in spite of when the gold price fluctuations were there. Still, our AUM has been growing. So when people need money, they will come to Muthoot.
Okay, and lastly, the data point, more than 1 lakh rupee as the ticket size, percentage of AUM and the number of customers.
That will be about 50%.
That is as number of customer or the AUM?
That is on the AUM.
And what would be as a percentage of number of customers?
Number of customers, I don't have that data.
But safe to assume around 20%? Or that is...
Today, our average ticket size is 60,000. Average ticket size today 61,000 rupees.
So the only problem with that is just averages. So that's why I'm just looking for a specific data point.
That only means that we have sufficient number of more than 1 lakh customers also. 1 lakh is not a big amount today.
Okay, great. Got it. Thank you so much, sir, and all the best.
Thank you. The next question is from the line of Vikas Kasturi from Focus Capital. Please go ahead.
Hello, sir. Sir, I had a couple of questions regarding your, so say for the next 10 years, sir, so what would be your sort of a plan for growing the business? So would it be increase of newer products related to gold loan, newer branches, and some light on that, sir? And second question would be, sir, how are you grooming the next generation of the Muthoot family in the business? Thank you, sir. That's it.
Thank you. Today, actually, on a lighter side, we are actually thinking of tomorrow. Tomorrow, are we able to open the office? Because of COVID. That is the lighter side I see. Tomorrow, is there a lockdown? Is there a lockdown in my area, etc.? That's on a lighter side. On the serious side, yes, we are always thinking day in and day out. Day in, day out on how to grow the business. Not only 1 year, 2 years, 10 years, we are always thinking about it, strategizing it, etc. So I don't think I can explain all those things there. So we are definitely on top of it. We are aware of it. We want to grow the business. Somebody, Digans was saying earlier that we should reach 1 lakh crore. Yes, that is a dream for us also. So we should look at that. The next generation, I think they are starting to get into the company. One of the chairman's son has already become the deputy managing director. He is based in North India, Delhi. He has been there for the last 20 years. So they are looking after the North Indian business. The other boys are also gradually coming into the business. So probably we have some plans for them also to enter into the next generation also coming into the business. That is only the generation. The other senior employees are also being groomed to take up more and more responsibilities in the company, and the newer verticals, etc. We are also having newer people coming in to take up senior positions in newer verticals. In the existing verticals, the senior people who have been with us are continuing to take up more and more additional responsibilities. So succession in the family side and the non-family side, both are on track.
All right. Thank you, sir.
Thank you. The next question is from the line of Vikram Subramaniam from Spark Capital. Please go ahead.
Hi, sir. First of all, my deepest condolences on your loss, both personally and to the entire company. So my question has mostly been answered. It's just a clarification. So it's again on the LTV. Just to clarify, if the falling gold price environment had continued into the current quarter as well, that is 1Q, am I right in understanding that at a branch level to the new customers, we would have still offered incrementally 75% LTV? There wouldn't have been any change in that. We wouldn't have reduced LTV, the LTV that is offered to the new customers. Am I right in understanding that?
So, no, the LTV is set every day based on the gold price as on the previous day, as per the RBI working. So, whatever is the maximum possible, subject to internal policies, we give the loans to customers. So, sometimes it can go up to 75%. Sometimes maybe because of the fluctuations in the gold price, we don't permit maximum up to 75%. So, that is a general rule.
Okay, got it. And in the presentation, you have mentioned about the number of new customers that have been onboarded. So that's coming close to about 7%. Fresh loans to new customers, that's coming to about 7%. Could you please give the number and the trend of how many customers have either closed accounts or have gone back from active to inactive?
See, there's a general number. We expect that our total customers who have had accounts with us in the last 4 years should be in the range of 2 crores. So today, actively 50,000 or 50 lakhs of them are having a loan today. They may come back after 1 month, 2 months, 3 months, 6 months. They may come back at any point of time. They are our customers. It is only when they need a loan they come back. This is actually, we should not compare this with a home loan or a vehicle loan, etc. This is a very quick loan. There is no entry loan. There is no exit loan. And whenever customers get the money, they would like to close the loan and go. So because they pay interest only on the active number of days. So whenever they have money, they close it. And whenever they need money, they quickly come to us. So these are our active customers. So what you see there is new customers, which is an addition to the hypothetical figure of 2 crores that is being added, newer and newer customers. So some customers, after 2 years or 3 years, they may not even come back, but we wouldn't know that they are not going to come back. But they are still our customers. They are still our customers. Probably after 3-4 years, probably he would have died and gone, or maybe changed place, etc. But we still have a very big customer base with them. The active customers who are having a loan today is what you are seeing there.
Got it, sir. So just to understand that from a fundamental trends perspective, I got what you were saying, but So along those same lines, once the peak of the first wave got over and things started opening up, by fourth quarter, that is Jan or Feb or March, when things started opening up more and more, I'm just trying to ask, was there an attrition in customers? Were we seeing an increase in attrition in customers as normalcy started seeping into the economy?
So again, there is no attrition of a customer. The customer takes the loan and goes home. So don't call it as an attrition. He has closed the loan, he has taken the ornaments and gone home. He'll come back after 1 month or 2 months.
It is not third quarter we had added 3.88 lakh customers. In the fourth quarter we have added 3.61 new customers. So that is a regular phenomenon. We cannot expect the same customer to come again and again. Probably he might come after 1 month or after 6 months. Our ability should be to deliver the service to whoever comes in. We cannot force any customer to take a loan, right? So our ability to bring more and more new customers, so that there is a ready pipeline of people wanting to take a loan.
Thank you. The next question is from the line of Sayantan Bhaumik from PineBridge Investments. Please go ahead.
Thank you, sir, for this opportunity. I just had one question. I just wanted to get a sense of the current quarter, and if I had to compare it with first quarter of FY21, if you can give some color as to what is the current situation on the ground, and what are your thoughts on the current quarter? That's the first one. And second is more of a data keeping. If you could just give the total provision that you hold in the standalone entity. That's including standard, specific, and basically the total provision that we hold.
Thank you. I think this year, from ground, from what we are hearing from our branches and managers and staff, etc., almost the same as last year. But then small difference which I've seen is last year the first lockdown was absolute lockdown. This time it is not that. This time it has been left mainly to the states. So some of them have given, localized lockdowns. So some places it is fully locked down. So that is one relief. But then this time it is extending a little more, I think so, because I see this time more and more deaths happening. That's what personally I see. Last time the number of deaths were not this much. This time I don't know number of deaths are. But then as I said, from the business side, I think it is almost the same. So last year also, it started in end of March. This year it started in, the second wave started end of April. So there's only 1 month difference. So this quarter will be a difficult quarter. Will be a difficult quarter because it's not opening up. Probably by 15th of June already this is going to get open. So this quarter we should see a very slow growth or maybe steady state of affairs. And the next quarter, I'm sure, when business starts reopening, things will be much better and people will start restarting their business. They need quicker loans, and Muthoot will be there or others will be there with gold loans to offer customers to restart their business and also for expanding their business, etc. So we should see better growth in the next 3-4 months. Surely we should see that. Your next question was about
ECL provision is 625 crores. Apart from that, we are keeping some extra provisions of about 295 crores that we have kept as a excess provision in the balance sheet. So totally we have around 920 crores of provisions.
Now that you asked about provisions, there is actually no need for any provisions in gold loan company because we never have a NPA loss. We have never had an NPA loss. We don't technically need, really practically we don't need any provisions. So actually that is also a reserve for us. It's a network for us actually. So that's on the what should we say? Not a technical side, but it is actually we don't need any provisions. So none of these things translate into a loan loss because of this NPA, etc. Just keep it there. So that's also part of the network, you can see.
Thank you. The next question is from the line of Susmit Patodia from Motilal Oswal Asset Management. Please go ahead.
Hi, good evening, sir. Sir, my question is on excess liquidity and what is the thinking now around that? You've been through one of the toughest years and it was not as bad as we had thought, as anybody had thought for that matter. So I was just wondering, what is the excess liquidity now and what is the thinking going ahead?
Sorry to interrupt, Mr. Patodia, so your audio is not clear, sir.
We heard him, sir. We heard him, madam. No issue.
See, like we explained in the last, I think, last 4 quarters, we have answered this. In today's environment, we need to keep extra liquidity. One, there is an uncertainty. Second, RBI also has brought in the LCR requirement. So to meet that, also we need to keep additional liquidity. Third point, like last year we could grow by 26-27% because we were able to raise resources in advance. We were prepared to meet the demand, additional demand in a very short period of time. So these are the 3 reasons why we should keep an extra liquidity. Of course, there is a negative carry, but we are also raising resources through commercial paper, etc., at a very low rate. So net, I don't think the negative carry is not much.
So how much would be the excess liquidity now, Mr. Oman?
Yeah, as on the reporting date, I think it's around 7,000 odd crores.
So you will keep that proportion of AUM around that number until things become normal again. Is that understanding correct?
It's not that there is no hard and fast rule that we should keep 7,000 crores or 8,000 crores, but then
correct, exactly. Yeah.
We will have good liquidity with us. Even if it is a small negative carry is there, I think we can. It's better to do that.
Okay. Thank you, sir. All the best. Thank you.
Thank you. The next question is from the line of Deepanjan Ghosh from Kotak. Please go ahead.
Good evening, sir. Just 2 questions from my side. One is, do you have any plans to infuse capital in the subsidiary? The second is, what are the plans for branch additions incrementally over the next few years?
So, maybe one question earlier was that we are having excess capital. So, we don't need any additional capital. One, for growth requirements, we already have capital, and we are also internally generating additional capital. In terms of the branch addition, generally we would like to have about 100 or 150 new branches. But because of lockdowns, etc., there are certain challenges. But I don't think our focus is not on branch additions for driving growth. Our focus is on existing branches to bring in more customers, and availing services from our branches. So that is a focal point for growth in business than new branches, because 100 or 150 branches on a 4,500, 4,600 branches is not going to be material.
Sure. And just one data keeping question, you mentioned the number of 170 crore of auctions for FY21. How much of that will be in the 4th quarter?
So, we last year we auctioned 171 crores, and out of that,
a good part of it was in the 3rd and 4th quarter, because the 1st quarter it was all lockdown. 2nd quarter it was lockdown.
And generally we give good time to the customer, like MD sir mentioned earlier. So 150 crores we auctioned was pertaining to 2006 loans which were originated in 2016, 2017, 2018, etc. Very old loans. So we are giving adequate time. Of course, our thumb rule is on the collateral quality. That's all.
Sure. Thank you, and all the best.
Thank you. The next question is from the line of Sanket Chheda from Batliwala and Karani Securities. Please go ahead. Mr. Sanket Chheda, your line is unmuted. Please go ahead with your question.
Hello, am I audible?
Yes, go ahead, Sanket.
Yeah, sir. Congrats on very good set of numbers. My question was particularly on the funding mix. now that we have received an rating upgrade, where do you see the shares going up in terms of listed NCDs or that definitely will go up, but where the shares would come down, either bank borrowings or you see ECB share coming down going ahead?
Yeah. So no, today we have a good, decent, diversified funding mix. I think we will try to raise all sorts of funding, banks, NCDs, retail NCDs. In terms of external commercial borrowing, rates plays an important role, but again, it is a very, very long-term money, so we have not taken any call on that. So, depending upon the growth and funding requirements, we'll take a decision on that.
Okay. And sir, on this tonnage growth, if I understood correctly, by the end of Q4, we had reached an LTV of 75% on the book, which has now come down to 65% because of the gold price rise. Is that correct? And that's why the tonnage growth was lower than the AUM growth this quarter?
Yeah. So if you look at, the gold price has fallen to about 4,000 rupees, towards the end of March, but subsequently the gold price has recovered. I think now it's around 4,500 or 4,600 rupees. So, when we have drawn up the reports, we have considered 4,000 rupees as the gold price. That's why the LTV is 75%.
Okay. And the last one, again, this question was asked that whether we maintain our 15% AUM growth guidance going ahead. Till last quarter, we were confident about 15% plus, but this quarter marks an remarkable performance wherein the gold prices were down 10 to 12% in the quarter. Still, we managed to grow 5%. So, we would still refrain from guiding anything more than 15% going ahead.
It is just that we would like to be on a conservative guidance. That's all. Nothing more than that. We don't see anything more than that. Just giving a conservative guidance of 15%. Probably we would like to tell 15 and achieve more, rather than say 20, 25 and achieve lesser.
Sure, sir. And lastly, the auction in Q4 was how much? 170 was for the full year, but in Q4 it was how much?
I think majority was in quarter 4 only, because that was the time when everything was open.
Sure, sir. Sure. That's all from my side, and congrats again on a very good set of numbers.
Thank you. Due to the time constraint, we'll be taking the last question for today, which is from the line of Vikas Agarwala from Bank of America. Please go ahead.
Thank you. Congratulations, sir, for a great set of numbers. Just a couple of questions. Most of my questions have been answered, but a couple of questions would love to hear your thoughts. One is on the disbursement side. Can you give us some sense of what was the disbursement trend in the month of April and May compared to the disbursement trend we've seen in the last couple of quarters? So that's one. And the second question is on the borrowing side. Can you also give us some idea on what was the incremental borrowing cost, meaning all the cost of incremental borrowing in the last quarter, which will give us an idea of the current cost excluding the legacy loans?
So the April and May, it has been locked down here and there. Most of the places it's locked down. Business is not. They are not able to open the branch. Customers are not able to come. So this quarter, the business will be much lesser compared to last year. Maybe April and May it will be almost same. I think last year April and May also was the same. We were in the same situation. Probably last year it was March and April. This year is going to be April and May. I think that's going to be what of. But then we are sure all the demand, all the business which is not able to come to the branch because of lockdown in April and May will come in June, July, August. So that's the first part. Second part, incremental, I think Mr. Woman will say incremental work.
So, in terms of the fundraising, of course, with the rating upgrade, we have done a public issue. We have raised about 1,700 crores of NCDs through public issue. There, the rates have been in the range of maybe about 6.6 to 7.1, on a 2-year and a 3-year. I think the bonds are traded well. I think we should see better levels coming now on the NCD front. So there is a lot of room for bringing down our incremental cost of borrowing.
Sure. Maybe, sir, just one small follow-up to this is, you mentioned about ECB being a factor of the cost, and in previously, you had mentioned that the offshore cost was slightly higher than compared to what you're getting onshore, and onshore market has actually done well post that. So from that perspective, how should we look at the cost benefit analysis for ECB, and then something which sir mentioned about ECB being a long-term money. So how should we look at that, and then where does ECB fit in your overall funding mix?
See, ECB expenses are the cost for fundraising to ECB is not currently being looked at, because the domestic fundraising can happen at a very much lower cost. So currently we are not looking at the ECB. In terms of a very longer term funding, we have been able to raise 10-year money also. I think those funds are also locked in the domestic market, 5 years and 3 years. So long-term funding is certainly available. So currently we are not looking at ECBs, but in case there is a larger growth available, and certainly, and if there is a very need for a very long-term money, probably we can look at it. But because of the cost factor, we are not currently looking at ECB. It's only because of the hedging cost.
Understand, sir. Got it. Thank you. Thank you so much.
Thank you. I would now like to hand the conference over to Mr. Kunal Shah from ICICI Securities Limited for closing comments.
Yeah, thanks a lot, and Mr. Muthoot and Mr. Mohan for patiently answering all the questions. And thanks all the participants for being there on the call. Thank you.
From Muthoot side, management side, I also take opportunity to thank ICICI and also the organizers for this, and also definitely the participants who have always been our strength, and you have always given us strength and guidance, and probably lot of suggestions also. Suggestions are always welcome. Thank you all for supporting us. From our side, we will try to do the best possible. Thank you.
Thanks, sir, and all the best. Yeah.
Thank you, Kunal. Thanks for arranging the call.
Thank you. Thanks.
Thank you. On behalf of ICICI Securities Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.